All right. My name is Brian. I'm your host tonight. We're just a few minutes late. I have a new computer here and we had some audio problems, so I appreciate you guys all sticking around. We have a huge crowd tonight. Please use the questions tab, and that's the way that I can see your questions and I will address them. I will be checking back and forth at the panel here, so every once in a while I will pause to make sure that I do answer your questions. You have my contact information right there. I'm just going to go to the next slide very quickly and let you read this quick disclaimer. All right. Obviously, you know that can be risky when you're dealing with any financial entity, especially leveraged entities. Moving into our outline tonight, fundamental analysis, lots to talk about there, technical analysis, and then we'll go into some of those intermarket relationships, and then, sorry for some of the spelling errors there, we will go into some of those different definitions of resistance, both short-term and long-term. All right, sorry about that pause. I'm just trying to get away from the construction a little bit here on the house. So let's go further into what I meant by fundamental analysis. Lots to talk about there. And I wrote about this on the Daily Forex Trading Edge in my blog earlier today. Every single day we seem to have gaps in the equity markets where we're having huge moves to the upside, huge moves to the downside, and they're happening kind of in pre-market sessions, if you will. And so what's causing that is all of the different scenarios out there, whether it be Europe or whether it be the U.S. or any international event. It's making it very tough to know who's speaking, what they're going to talk about when they're speaking. And so you have to be very careful as a trader not to get emotional, not to overtrade. And that's actually some of the topics that we'll be talking about as we get to tonight, the end of tonight's webinar. We'll be leading into trading psychology in 2 weeks. So you have to be very careful as a trader. These are great markets because there's lots of opportunity and volatility, but then again, anything can happen at any time, so you can't be emotional and attached to any trading idea. Things can change in a heartbeat. How do you stay on top of those different current events? Well, there's a link right through Interbank FX to get to forexfactory.com. So you can go ahead and we can try and get there. Let's see if it's shut down. So here's the link to it right here. This is your Forex Factory link with all of the different economic indicators. You want to be aware of those because basically they drive interest rates, and obviously interest rates are tied to all the different dollars that you're trading out there. Another way to stay on top of things is CNBC. You have Bloomberg TV, Bloomberg.com. Your broker provides a lot of good education and fundamental information out there as well, and then other market sites in general. Technical analysis, what are the traders doing with the fundamental news? Again, I wrote about this on my market commentary a few weeks ago. I'm sorry, not a few weeks ago, just on Friday after the big unemployment report in the United States. We were expecting almost 100,000 jobs to be created, and we only created we didn't create any. We didn't lose any. We didn't create any. We had zero creation of jobs, basically. And that's a big miss. And the jobs number, aside from Federal Reserve statements and government intervention, is the biggest economic number we get for the most part, and it can drive the markets for days and days and days in one direction. It's a very bad number. The stock market did go down for a few days, but yesterday, if you're watching the stock market and the foreign currency markets, the stock market went up and rallied very hard yesterday afternoon, and then today, kind of in anticipation of hopefully good news from different speakers and things like that, it went up again. So basically we're in the same place that we were just a few days ago, and I can show you that. We can pop over here to the chart of the equities, and we'll pull this up and just be able to see the past few days. So basically, we're just hovering right below 120, and on Friday, we were just about 123, 124, so we're not that much lower than where we were just a few days ago, and we absorbed that bad news. And again, remember, with all of this intervention, and we don't know what's going on in quantitative easing 1 and 2 and 3, and who knows 4, 5, 6, maybe bad news is good for the stock market. Maybe good news is good for the stock market. Maybe bad news is even better for the stock market than good news. So you want to be aware of what the traders are doing with this news. That helps you with your fundamental opinion. And then the technical analysis is when and where you do things. So major trends, support, and resistance, live market examples, intermarket relationships. Let's tie that in right now. I'm going to have to go and reboot Interbank FX, so just bear with me while I bring it right back up. All right, that didn't take too long. So as you can see in the equity markets, we've been kind of hanging pretty sideways. Here's the month of August into September, not doing too much, kind of support down here around the 112, 113 level, and resistance up here in that 120, 123 level, that key topic resistance, which we're going to get into. Let's just go into some of the foreign currencies and get a view. And like I said, I'll pop back and forth to see if there's questions, so that's why I may be pausing here and there. All right, so these are, let's roll into some longer term view charts. So let's roll into some daily charts. And again, I talked about this actually on the Daily Forex Trading Edge earlier today. Look what's going on with the pound versus US dollar. The pound is getting weak recently against the US dollar. The euro is getting weak recently against the US dollar. Let's look at the Aussie dollar against the United States dollar. Getting a little bit stronger over the past month. New Zealand dollar getting a little bit stronger, but kind of sideways for the most part. Canadian, the U.S. has strengthened in the past month or so and then kind of gone sideways and held on to that strength. And then we obviously know there was some intervention in the U.S., in the Swiss franc, and so that obviously caused the Swiss franc to be devalued against currency. So we'll kind of wipe this big bar out, but overall, it was moving up just like the Canadian dollar, where the U.S. was strengthening against it and going sideways. So for the most part, the United States dollar has been strengthening. So when the markets roll off, when the S&P, when the equity markets roll off around the world, go down in August and then kind of sideways, the dollar has been going up and kind of sideways. So that's been your flight to quality. So that's understanding those intermarket relationships for the most part. Maybe when the stock market gets oversold and bounces up, then the dollar gets weak, and when the stock market gets overbought and rolls down, the dollar basically will get a little bit stronger. But what's interesting over the past few days is here's the pound on its lows hanging down here against the US dollar, and what's happened in equities over the past 2 days, they popped up. We had this actually occur last week when the stock market popped up a couple of days in a row, and then the pound just was acting very weak, the euro was acting very weak, and then all of a sudden we saw the stock market dive right down. So right here we have the stock market going up the past couple of days and the pound acting very weak and the euro acting very weak. Based on past performance, I'm not sure which one is out of whack. If the stock market keeps going up, you would expect maybe the pound to gain some strength and the euro to gain some strength. If the stock market rolls back down, we might see the pound take out these lows here and the euro maybe take out these lows. So major support right in this area basically, if you look at it kind of right here on these levels, if I can draw a trend line for you guys. So kind of that support line, something like that. And if I can do it on the euro as well, draw this support line right where we're bouncing right now. Will it hold? That's the big question. Maybe we're just going to be range bound and you can trade this support and resistance. We don't know, but based on past performance, with no guarantees of future performance, it bounces off that trend line, it turns up, bounces off that trend line, it turns up. It can be a low risk or lower risk, higher probability trade, but again, no guarantees out there. That's why we use trading psychology. That's why we use money management and account management, all this stuff we'll talk about in 2 weeks. But basically the reason is We don't know what's going to happen in the future. All we can say is this is a good place based on past performance. Tomorrow Obama could be speaking. Someone else could be speaking around the world. Anything could change. We know that anything can change. Look at this move in the US dollar Swissy. It's a massive move. I'll bring it down on a smaller time frame. Bring up the crosshairs here. 78 even, 78.50 up to 85 roughly, 84, 85, 86. Massive, massive move, and that was just because the government said we can't have this strengthening anymore, and so that can happen anywhere based on interest rates. So just keep that in mind. So that's what I mean is don't get too attached. You've got to use the charts to say I'm right, stay in it. I've got to use the charts to say I'm wrong, get out of it. All right. So moving into tonight's topic, let's start to move into resistance. So this should say resistance. So sorry about that. Like I said, I have a new computer and wasn't able to switch everything over. And so just kind of been getting everything up last minute over the past couple of days. So why is resistance so important? And we're going to look at long-term and short-term examples and bring in the concept of risk to reward. Let's start in the equity markets. All right. So resistance, we kind of talked about having some areas where it's too high. The webinar that I did about a month or so ago was on support, and you can find that on Interbank FX's YouTube page. So we talked about the bottoms where you can't go any lower and you turned up, and more buyers and sellers. Now we're talking about resistance. So it's rough to look at here in the S&P, but kind of that 122, 123 area right there is resistance. A really cool stock to look at resistance, and again, I wrote about this today in the Daily Forex Trading Edge, and I talk about these things on the Interbank FX Connect. If any of you guys are on, check out. Let's bring this down a little bit smaller so we can see it. We don't need such a long-term chart. We all know what's going on with gold, but look at around 185 or 190 in gold. We topped out, we fell down, we climbed all the way back up. Yesterday, we opened up at 1900, the stock market's going down, flight to quality, and then all of a sudden, late in the afternoon, what did the stock market do? It rallied. What did the stock market do today? Rallied. So gold bounced off that 185, 190 level, went down yesterday afternoon, and then went down today, obviously, as we went up. So just looking at a 5-day chart, yesterday, here's yesterday, open up high, and we just sold off the entire day. Look at yesterday on SPY. It's going to be just the opposite. We opened up low yesterday and rallied up and continued that rally today. And just flipping back to gold, if we're rallying in the S&P and equities, and hey, everything's much better, there's no problems out there, we can rally 100 points yesterday or more, we can rally 250 points today, well, you see obviously gold heading back down. So there are those nice relationships. So if you own gold, or you like to trade it, or you own the physical, lots and lots of people are buying the physical, you've got to think about defense. I always talk about protecting our assets. Look at buying puts, doing some kind of protection strategy up there at that double top. No guarantees, it could go higher. Yay, my portfolio, yay, my physical makes more money, and my trade loses money if it goes higher. So there's no guarantees. If it holds there and double tops and moves down, well, my trade makes money, but my ownership loses money. So fun little trades, intermarket trades basically to do if you're holding on to gold and things like that, how you can hedge. So you can do that for any entity that you're holding. So that's a good level of a good topic there as far as resistance goes. And you can see where it topped out twice in one of those resistance chart patterns that we use, double tops, triple tops, head and shoulders, things like that. Well, there's a nice example of a double top. We don't know what's going to happen next. It could triple top, it could go higher, who knows, or it could satisfy that double top pattern and head down into the 160, 150 area. We don't know, but someone who's a long-term bearish on gold up there or someone who's short-term bearish on gold up there, they could get in for the same exact trading chart-based reason. They could have a similar type of stop. One person might be out today with gains or yesterday with gains, and another person might be holding on to it to see if it can break this little neckline here in the double top pattern. So resistance in chart patterns, if you're looking for things to top out, you want to be aware of topping chart patterns. Moving into Forex and finding resistance, we're still on the long-term charts here, but kind of the euro has been in this big channel. It's been sideways for quite a long time, and that's kind of important to realize. So we might have something like this where, for the most part, we have resistance. We're not in a big range here. 3 to 4 pennies, not 300 to 400 pips, not huge, definitely enough to be trading, but you just have to be aware of that right now we're just in a range. We're at the bottom of the range right now. Could we go up? Based on past performance, we've gone up from here, but anything can change. And that's the one thing I tell a lot of my traders, a lot of my clients. I say, just because it gets to support or just because it gets to resistance doesn't mean we need to take it. Just because it hits a Fibonacci, just because it looks like it's double topping, doesn't mean we have to take the trade. You've learned new information by the time it got there, and you may not want to get into it. The Swissy is a perfect example of that. We might be looking at it up here to do something because it's too high, but there was an intervention there, and we got to say hands off. So if we look at it on the longer term, we might have said, hey, the last area of major resistance was right in this area, and we might be looking to get short up here, but you can't get short because something happened that just changes everything and blows all that out of the water, and we can't use those old levels. We have to obviously be realistic about what's going on in timing and things like that. So that's what I mean by the markets have the potential to gap and move very quickly at any time, overnight, right in the middle of your trade. We've got to trade very carefully in these markets because, yeah, luck could be on our side and we could have big winners, or it could be one of those that's just bad luck, nothing we could do, and we had a trade on and it went against us due to someone speaking that we couldn't control. So you've just got to be aware of it in these markets. Do not overtrade in these markets because it can be deadly to your accounts, obviously, if one of these news events happens. So going back and looking at some resistance, short-term and long-term. Long-term, obviously, that's something on the daily that daily chart for euro that's happening over and over again for month after month after month. Look at it. We're looking at, I'll put the crosshairs up for you guys. We're looking at May, June, July, August, and going to September that we've been in this range. Maybe we're in this range for years, and you guys who know support and resistance in trading right on the edges will trade very well. Maybe we break out of it tomorrow, and that gives us new information that we're weak and we broke through support and we're going lower. Maybe we bounce off this and we break through resistance and we're going higher and we head back up towards these old highs at $1.50. So that's long term. Let's look at things on short term and find some resistance short term. So let's try and find some here. I'm looking at resistance here shorter term. So here's the US Canadian. Let's see if we can find it. So we're going down now to an hourly. So we're starting to find resistance, and look at where we're at right here, kind of in that parity region. So just over the past few days, we found a lot of resistance. I'll draw this trend line going across. Again, very rough. But in this area, it's having a tough time. And again, if you're relating maybe the Canadian dollar to some oil prices, there might have been a relationship there where when oil gets too expensive and it comes back down, the US dollar strengthens. When oil gets too cheap and starts to turn back up and people buy it, the Canadian starts to turn up. So right here over the past few days, you have some resistance right here, right around the 99 even area, maybe a spike higher or so today, but overall, it kind of went sideways. So again, you have short-term and long-term examples of resistance. And what does resistance mean for risk-reward? It means low risk, higher reward if we can get in near resistance level and if that resistance level holds. This area right here, if we were counting on resistance from a couple of days ago or last week, this may have popped us out basically because it might have gone up too high. It all depends on how much we were willing to risk and how much we were willing to make. It all depends on if you were a short-term trader or a longer-term trader and what your risk reward and how many pips you were going for and how many pips you were risking. So keep that in mind that maybe people were using this and it just got a little bit choppy here today as a stock market opened and we popped up high in the U.S. And the stock market really wasn't up that much when we opened. And so as the stock market continued to go up and up and up and up as the afternoon wore on, the United States dollar got weaker and weaker against the Canadian dollar. So that kind of makes sense with oil prices, demand, and things like that starting to move up. Let me just check in here and see if there's any questions so far. Looks like we're good, so you guys are getting most of the information tonight, I hope. Like I said, we meet every couple of weeks here on this, so if you want that daily update, I'm going to go and show you that right now just so you guys can get that, because I know we usually meet for about 30 minutes or so, and so we're kind of right at that time right now because we had a little delay. So let me just fast forward here along to where you guys can get that daily update. So just a quick review. We talked about fundamental events and how game-changing they are right now and how active they are. Technical analysis, a good way to see what are the traders doing with all of that news, and then seeing some of those intermarket relationships. We talked about gold. We talked about the Canadian and oil. We talked about the S&P 500 and equity markets in general and the United States dollar in general, and obviously why is resistance so important to us and how to define it. We'll look at it a little bit more detail for just a couple more minutes, but I just want to make sure in case anyone has to run out that they have this information. Next webinar, a very, very crucial one, we'll be talking about, and again, you can erase that one that says resistance. We'll be talking about trading psychology. There's a lot of people that already signed up for it, so should be heavily attended. That'll be 2 weeks from tonight at the same time. Education and recordings, again, you can go into the education section at Interbank FX. The daily Forex Trading Edge is where I'm updating. Almost every day I'm writing. That's my blog, Finance Banter. Same information for the most part. And then obviously to see my previous webinars in the entire series that I've been doing, about 9 of them so far, you can go to YouTube and then Interbank FX videos. Keep in mind, if any of you haven't been to the Interbank FX Connect, another great way to get updated throughout the day. My tag is The Locals Take. So THE, Locals Take, and then basically I'm just updating on the markets as they go throughout the morning for the most part as I'm in front of the computer. So getting back into just a couple more examples, and then we'll finish up. Let's look at resistance where it's not so horizontal like it is here in the euro. Let's look at some resistance basically that's moving down, and we can find that in the pound. We talked about the trend that it's moving down. I'm just going to see probably a 4-hour chart here. I'm just going to draw this trend line so you can always connect these highs, and the definition of a downtrend is lower lows and lower highs. Just so you can see those lower lows, I'll connect them right here. So again, this isn't that long term. This is for the most part just the past week or so, the past few days of trading, and you can see that we're kind of in this range, hitting the tops of it, bouncing off that resistance, heading back down towards a support line. The trend is definitely down. We're near a big level of support, so you have to keep in mind the bigger picture out there, and we're right down there. So you don't want to get caught in saying, "Oh, we're at support," and you're looking at it maybe on this time frame and saying, "Hey, I'll get in here and have it bounce off," because this is a pretty crucial area down here in this area in the high 150s, 160 area basically, as far as the pound to the US dollar goes. Even looking at it on a shorter term, we'll just look at it on today's chart. And again, today, you guys can tell me, was today a huge trading range in the pound or a very small trading range? S&P, the stock market, had a huge up day, 260 points in the Dow Jones, something like that. And what did we do? We stayed in a range basically of 1.600 roughly to about 1.5930, so about 70 pips. Not the biggest range, obviously, be trading. We're kind of hanging down in the bottom area, as we know, of that support line, both the trend channel and the overall big support line. So overall, if you were selling the pound today, you obviously did okay, noticing that the trend has been down and these small little rallies were the place to go. But overall, not super, super volatile. Most currencies were pretty quiet today. Why? Stock market's up big, everything's great around the world, not too much volatility, and there just wasn't that much activity overall in most of the currencies for the most part. So for the most part today, the dollar stayed strong against the pound, stayed strong against the euro, stayed weak for the most part against the Aussie, weak against the New Zealand, strong against the Canadian, and strong against the Swissy. So out of 6 pairs, 4 of them, the dollar showed strength in them. So we'll kind of wrap up. I'll just check back here and see if there's anything that pertaining to tonight's discussion. I think we're good. So thank you guys very much for joining. Thank you guys very much for staying on and let me reboot the computer and get this working. Hopefully it was helpful for you. You guys have the chance to go ahead and put in some feedback. Hopefully this was useful for you tonight. I always talk about trading psychology. I always mention fundamentals. I always mention technicals, so you guys get the lay of the land for these webinars. If there's anything you'd like to hear, you guys can email me directly. If there's anything you'd like to hear, you can fill out that information for the staff over at Interbank FX. So again, if you want to go ahead and get a hold of me directly and ask anything that pertains to you, I'll just flip back up to the beginning here. That is my email right there. You can get a hold of me through Interbank FX. You can get a hold of me through that email directly. I look forward to seeing you guys in 2 weeks, and hopefully before then on Interbank FX Connect throughout the day, and then at least for the most part once a day as long as the markets are busy on either my blog or on Daily Forex Trading Edge. Thank you guys very, very, very much. Have a great evening, and remember, there's 3 things that are so important: trend, support, and resistance. If you're using those 3 topics and you're trading with the trend at support and resistance for the most part, you're limiting your risk and you have higher reward if it pans out like it did on past performance, obviously. No guarantees. That's what we'll talk about in the next couple weeks, talking about trading psychology and things like that. Have a great evening. Thank you very much.